Today we're going to take a look at the conduct or misconduct exclusion found in every D&O, directors and officers, and E&O, errors and omissions, liability insurance policies. To start with, I've said many times that no two D&O or E&O policies are alike. Both are what we consider non-standard forms of insurance, meaning that there is no insurance bureau or authority that publishes a policy form that every insurance company adopts, like the general liability policy. Instead, each insurer has their own policy form, and in fact, may have several different forms tailored for different industries. A private company D&O form used for a mid-market manufacturing firm is going to be different from a hedge fund or other alt-asset fund manager policy form. Another point is that all policy forms are negotiable, using a variety of exclusions, carve-backs, endorsements, and amendments. Having a skilled broker by your side to procure coverage which is tailored to your situation is really important. That's a long-winded way of saying you just don't buy a D&O or E&O policy off the shelf. Careful examination of the policy is required to determine that you're getting the broadest terms and conditions possible. Now, on to conduct exclusions. Just about every D&O and E&O policy will include exclusionary language around conduct or misconduct acts and claims. Underwriters do not want to provide coverage for losses which stem from acts that may be criminal, fraudulent, or dishonest. In addition, coverage should not be provided to insured persons for taking illegal profits, gains, or remuneration. But most underwriters also recognize that the allegation of a misconduct should not bar coverage entirely. There's a balancing act between providing defense for allegations made against insured persons and preventing the use of insurance to fund intentionally wrongful conduct. This balancing act is where the proverbial rubber meets the road in the form of conduct exclusions. What you are looking for in negotiating a new policy or renewing an existing policy is to tailor your conduct exclusion, among many others, as narrowly as possible. The best policy wording when it comes to conduct is one that is triggered only when there is a final, non-appealable adjudication. In other words, the policy provides the insured person's defense coverage all the way through the judicial process, including all appeals, until a finding of a criminal or fraudulent act was committed or not committed. This is often phrased as final adjudication wording in a D&O proposal. Getting to a point of final adjudication can cost millions of dollars in defense expenses, which is why negotiating this exclusion is critical. Get it wrong, and those costs are coming out of the directors and officers' pockets. There are other exclusions in D&O and E&O policies which we'll cover in other videos, but if you have questions regarding management or professional liability insurance, give me a call or drop me an email. I work across the U.S. with a variety of firms of all sizes, and I'd love to hear from you. My contact info is coming right up. And hey, if you like this video, give it a thumbs up. Thanks.